Good morning, everybody, and this is your S&P 500 setups for today. So we're still in, well, we could be breaking the wedge. We'll have a look at that now. We have touched and sort of bought off this bottom area here, and I'm looking at the daily at the moment, and you can see that is what's that, 39.21. You can see there it is there. And now we have this big piercing pattern, and a piercing pattern off structure like this with the oscillators group to the downside is not an area that I want to be short in. Okay, so no confirmation of it just yet, but it's definitely not something I want to be short. If you look at it on the 8 hour, that's been a pretty strong break of the wedge as well. So we are technically in a downtrend. You can see the crossover here below the 155. Oscillators group the downside, so that means you don't want to be, you want to be taking profit if you are short. So that's kind of the structure you've got there, and then you're looking to be short higher up. And the area that does attract me at the moment would be all the way up here, 4100. So that would be on the 8 hour. The one concern I've got is there's a lot of noise at the moment about this being a bottom, that the bottom is in. There's so much noise around this, and this is typically what happens. What the noisemakers are trying to do is to get everybody suckered into the market to get it moving in a direction. So they're looking for it to move up. But what you don't know is whether they're just looking for it to move up where the smart money can get back in for another short. So that's kind of what you've got to worry about. That's one of the reasons why I don't pay attention to the noise. Because the noise, you know, if you can ride the noise, there's people that trade the noise, but trade it, then get out of it, and then look at what's going on. Be clever about it. Don't just follow blindly. So that's kind of some of the structure that we're seeing. If you look at the 3 hour, that's it's a textbook wedge. That 1, 2, 3, 4, 5, 6, 7 touches in the wedge, and you can see it just gets narrower and narrower and narrower. And yesterday was getting really narrow, with a bit of a fake out to the downside. And that there, you probably had a lot of people that were like, okay, that's it, we're breaking 39.20, it's time to sell. So a lot of people come in and sell at the end of a move, just based on lack of experience. And institutions know that, and they encourage it so that they can basically come in and trigger your stop losses. And that bar there is a stop loss trigger. So it's stop loss and people starting to add to that buying frenzy. So you can see there, sideways, then a big move to the downside because it's a range. So you've got range traders here trading the break of the range, and it failed, basically. Right, so what are we looking at? There's quite a bit of structure we need to pay attention to. This area where we are at the moment, see that's the previous swing low. There are some sellers here. Well, that was profit taking going into the close. Oscillators grouped to the upside, and also diversions. There's a previous swing high. Okay, and that's lower high, and that's higher high. So there is a bit of divergence here, but there's bigger diversions on the bottom. I wouldn't pay too much attention to that. We are in a downward trend. You can see we're below the moving averages. Moving averages have flattened out. So what I expect to happen today, we're probably just going to range around here until non-farm payrolls this afternoon. So that's kind of the lay of the land for us at the moment. If we just drop down to the 15 minutes, and I just want to look at the hindsight here, there was nothing worth trading. Yeah, I mean, I was looking at this quite carefully, and there was just nothing. This put me off immediately and just made me close the chart. So at the moment, on the 15-minute, we've got a crossover. Oscillator's not helping us at all at the moment. We do have a piercing pattern on the daily. So in other words, it was a gap down. There's your gap down, boom. And then we closed halfway up the previous day's bar. So for me at the moment, we need to clear, sorry, what I didn't highlight here is where would the entry be for this piercing pattern? And you'd want confirmation close above this red bar here. So that was Wednesday's bar. Then that's above 4,000. So if we get another daily close above 4,000, that validates this pattern. Okay, I'll just keep that in the back of your mind. So obviously it's got a way to go, but today non-farm payrolls could be the noise we're waiting for that's going to drive this. So the way I would look at this is twofold. One is to hang around here, see what's going to happen at 39.47, 39.50. See if price comes back into this area. That depends what happens during Europe. And if I look at the DAX, you're probably not going to get that. I think the DAX is just going to drift higher. That's the one thing. And then the second thing is a break and retest of 39.69. So break up, retest that, then you're looking for a move up. Personally, I don't think it's worth touching this until after non-farm payrolls. Once non-farm payrolls data is out, and give it 15 minutes, let the noise settle, then pay attention to your levels. And just get those levels in on the hour. So every fractional is your level. So there's your swing low. You see it has been tested at the close, so that's the first level. Then you have this cluster here, which is your next level. Bear in mind you've got a wedge break. You do have overhead resistance as well. That's one area. And then the other area is going to be there was one here, but doesn't look like as much. So that's probably the zone you need to pay attention to. Just want to double check. Yeah, nothing else. Okay, so this is the area you need to pay attention to, and obviously that is above the previous day. So this is 4,000. So I would expect any move to the upside is going to be capped by this with a pullback, and then probably going with the close. If the bulls are really in control of this, they're going to push a close above here to trigger this pattern, and that pattern is the piercing pattern on the daily. That happens, you're looking for a move all the way up here to 4,100. And it looks like what's happening now is the DAX is starting to move in 100-point ranges or 100-point moves. So you see it moves 100 points, then it consolidates, and then moves another 100 points. So last year it was doing that in 200-point moves. This year it does look like it's starting to settle into 100-point moves. So let's see what happens, ladies and gentlemen. Let's see what happens today. I'm not comfortable shorting down here, that's for sure. I'd rather be shorting off 4,100 or even 4,000. If we reject 4,000 properly, that would obviously null and void this setup that we've got here on the daily, and then we'll have a continuation down. But I suspect, just looking at the higher time frames, I think the weekly is the only one that is against us. But just looking at the monthly, you can see green, red, green, red. What's the next logical one? Green. And that is still forming a series of higher lows. Anyway, that's kind of my view at the moment. Hope it helps, and we will catch up with you on Monday morning. Enjoy your weekend. Cheers for now.